It's hard to imagine that barely 5 years ago, China accounted for 90% of the world's Bitcoin trade. According to data provider Chainalysis, almost half of the world's Bitcoin was mined by computer farms in China at the start of this year. But now, that share has hit zero, says the Cambridge Centre for Alternative Finance. However, industry watchers say the writing had been on the wall for some time.
The first one that I can remember is preventing banks from handling cryptocurrency transactions. So basically disconnecting the banks from the cryptocurrency exchanges. So this has been an ongoing process for a while. I think the key driver here is the central bank digital currency, or the EUN, that the central bank is launching in China. With that already live in certain parts and set to go live nationally over the next couple of years, I think the government wants to ensure that all of the risk of traditional cryptocurrencies is taken out of the market for the launch of this new central bank digital currency.
Analysts say another major factor was the fear of capital outflows from China in a largely unregulated market.
China doesn't allow their citizens to take out anything beyond, to have anything beyond 50,000 US dollar as a foreign currency, right? Now, with Bitcoins, and because of the nature of Bitcoins, you just don't know who is owning and how much it is owning. So that vision or that control is lost because I just don't know, right? So that becomes then China's, intention to start regulating.
Others point to China's energy crisis as a factor and the huge drain on the energy grid that is caused by Bitcoin mining.
China represented a huge volume of the mining, and now all of them have relocated. So there are 3 batches of miners. The first batch, all the huge enterprises, the moment the ban came, they all relocated out of China. The second batch, the silent majority, silent 1/3, so to speak, basically complied with government regulations and shut down. The other 1/3 is what is still trying to get out of China right now. In fact, USA has now taken the leading position in the world with close to 40% of the mining in Bitcoin and Ethereum. And then second is Kazakhstan, third is Russia. So previously, China was number 1, followed by these 3 countries. So all 3 of these countries have gained significant market share.
There could be other implications as well for the crypto space outside the mainland.
This is one of the first times that the government has said crypto is illegal in China. And so certainly that will probably affect people's willingness or interest in getting involved. And that may even have spillover effects to Hong Kong. If you are a cryptocurrency company in Hong Kong, with the way that Chinese regulations around the financial industry are spreading to Hong Kong, many of them are considering moving out of Hong Kong to other jurisdictions around the region.
The major plunge for crypto prices this year came in May 2021. Bitcoin fell to about 35,000 US dollars from a high of about 58,000. This was attributed to 2 major announcements. Tesla CEO Elon Musk suspending vehicle purchases using Bitcoin, citing environmental concerns. And China banning financial institutions and payment companies from providing services related to cryptocurrency transactions. 2 months later, prices were climbing again, briefly interrupted when China announced the total ban before bouncing back.
If you start looking at what Fidelity Investment is doing, they are trying to bring in the ETF around Bitcoins, right, and other currencies. And they are starting with a minimum investment of 100,000 US dollars. So that is really for the cream, right? So there's a lot happening right now on cryptocurrencies. I think the future is there. It's not going away.
After the ban was announced, Binance said that it would close down the yuan trading feature on its peer-to-peer platform. But while crypto companies might be withdrawing from the mainland, Chinese tech users have historically found ways to bypass regulations such as in the use of VPNs to hide their location.
The challenge with Bitcoin or Ethereum or any of the other many decentralized cryptocurrencies is that nobody can really turn them off. They're always going to be there as long as someone around the world is mining them and using them. So it's, the governments have to do as much as they can, as much as they feel they need to. But in the end, nothing can really stop these cryptocurrencies from existing.
A new report this month underlines why Beijing's concerns over cryptocurrencies might not be misplaced. According to MSCI, institutional investors may have more exposure to cryptocurrency risk than they realize. It's warning of what it calls creeping exposure in companies with a combined market capitalization of $7.1 trillion.